Is the Trump effect enough to offset this downward pattern? This is the question.
So Daniel, as we head into the new year, I'd like to hear your views on the US economic outlook for 2017, and also in light of the US presidential elections and a Donald Trump presidency. Has these outlooks been modified at all?
So actually we are quite optimistic in terms of economic outlook for the US for 2017. Actually, the economic indicators have improved quite a bit over the past few months. We have an acceleration of the manufacturing activity in the US. The labor market is still very strong. We even have some improvement in expectation for inflation. So globally, we are still quite positive for 2017. Sentiment indicators also remain quite strong and show that the US consumers remain very optimistic also about the economic outlook of the US. So in this context, the Trump election could bring some more optimism to the equation, as new initiatives could add some potential to GDP growth for next year, as well as inflation. In this context, this could bring hopes that this already very long economic cycle could be extended further. However, and that's the area of concern we have, we are a bit concerned about market expectation about the effect of the Trump election on the US economy, as the market seems to price a best case scenario where all the initiatives are accepted, put in place quite quickly and have a huge effects on the US economy. However, while these reforms are quite positive for the US economy, they are much less for the country's budget or current account. And we are still struggling to think that the Congress, even with the Republican majority, will accept all these initiatives and reform. So we may be a bit exposed to some disappointment next year, as investors realize that maybe their expectations were a bit too optimistic.
And in light of that, what segments of the market are you in favor of heading into 2017?
So for 2017, we would favor sectors that have lagged and are still in a recovery process after months or years of underperformance, namely financials and energy. First, financials should benefit from several tailwinds in 2017. The main one being the increase in interest rates in the US, as the Fed will continue its gradual monetary policy normalization process. This is very positive for the industry, with banks and insurance experiencing some major improvement in their profitability, to an extent that maybe is underestimated by the market. So in addition, financials are still one of the cheapest sector in the US. So we are still positive on this segment and think there are further room to go. On the other side, energy sector is recovering quite a bit also, mainly due to a stabilization in oil prices. The recent announcement about the production cut from OPEC countries, as well as an improvement in global economic growth, are all positive factors for the sector. And we think that this re-rating could extend next year as well. In terms of investment styles we would favor, we would recommend a strong exposition to domestic companies, so maybe smaller cap ones, which could benefit first from any foreign trade policy restriction from the Trump election, but also as well as with the USD strength we have seen over the past few weeks, some larger international group may have some issues in terms of growth next year.
So after 10 years of the bull market, let's take a look at US equity. So quite a few of Donald Trump's policies seem very optimistic for US equity. So what valuations and potentials are there in that market?
So yes, 2016 will be the 8th consecutive year of a bull market if you include dividends for the S&P 500. And today the market trades at approximately 7 times forward earnings. This is the highest level seen since the tech bubble in 2002. So this represents a kind of valuation seen at the very end of the economic cycle. That doesn't mean that the market will certainly go down from there, but we think that further potential for multiple expansion is rather limited at this point. So any further return for the S&P 500 may come and may rely on companies' earnings growth for next year. On this point, consensus is also quite optimistic and expects approximately 12% EPS growth for next year. We are at the end of 2016. This number may be revised down. This is the usual pattern. We have quite optimistic expectation that go through a downward revision process throughout the year. Is the Trump effect enough to offset this downward pattern? This is the question. 12% may be a bit too high. However, there are some potential left, although it's quite limited.
Great. Well, Daniel, thank you so much for sharing your insights and coming into the studios.
Thank you.
Well, that's all for myself and Daniel, but for all the latest updates and exclusive market moves, do keep clicking back.